Hello, happy week 129 coming at you from Vancouver. This is not my normal scene. Half my family lives out here in Vancouver, so it's our annual family trip. But I had to make the time for this report. Week 129 is here, and it is just as uneventful as you would expect a week to be towards the end of summer, which has been a pretty epic summer in Toronto, anyway, with the weather we've been having. So, week 129, digging right into it. And in case you are new here, and chances are you are because we're getting some better views on these videos right now, which is great. We are the only market report. The Spring Team has created the only market report that exists in Toronto that is tracking the market week over week for very specific communities that matter to where most of our clients live, work, and play. We are adding Durham at some point over the next 3 weeks to this report because we do have a Durham specialist on our team right now. So we're very excited to move that forward, but we are the only market report that has been doing this consistently for the specific neighborhoods in Toronto that matter to our clients. And if you are absorbing any real estate information from anywhere else, just please make sure that it is relevant to the neighborhood that you are interested in buying, selling, or leasing in. Because general Canadian real estate numbers, GTA numbers, 416 numbers, or 905 numbers don't always matter to the person who has a detached house in North Riverdale to sell versus a condo on King West versus a townhouse on the Queen West or versus a Roncesvalles semi or whatever it happens to be. Every neighborhood in Toronto, every product type is reacting very differently to this slowdown. So it's very specific to look at numbers that are unique to the areas you are looking to transact in, which is why I created this report and have been delivering it consistently for 129 weeks in a row. So again, I'm Ara Memorian, founder and partner at the Spring Team Real Estate, and we are going to dig right into this right now. So looking at the blog this week, we have got some things going on over here. So let's make that a little bit smaller so we can see it. So the main question is, would you buy real estate in Toronto right now? I mean, a lot of people will say no to that. A lot of people will say yes. We have some of our clients saying yes. Those are the more experienced buyers that have seen real estate cycles happen, and they know that there is not going to be a continuous upward trend in terms of real interest rates. We have some people that are more cautious because perhaps their jobs are not as stable or they're not open to the potential fluctuating payments on a mortgage. And, of course, there are fixed payment options for even variable mortgages. So it's something to look into. But what's really surprising this week is we have a number of homes going into multiple offers that we did not expect to go into multiple offers. And the common denominator really seems to be the basement apartment or some sort of income producing opportunity within the home. And I think I talked about this particular property a couple of weeks ago, or maybe last week I talked about this. I can't remember. But here's a simple home on a street called Alton Avenue in Leslieville, one of the better streets on East Leslieville. Like this home is, let's look at the pictures on the inside. Like it looks fine. It's a lipstick renovation job. Behind the walls, raging disaster, knob and tube, riddled with mold. But you'd be fooled looking at these photos like it's some sort of like fully renovated turnkey property, where in fact it wasn't. It all looks great in photos, but again, this house listed at $999, generated 3 offers within 2 days, and it sold for $999. And that's a really huge difference in the market right now. Is when you have competing offers, that doesn't necessarily mean things are going to go over asking. But I wanted to show you this one hilarious photo from this property. I don't even know if they have it here. No, you can't even see it. But like right here in this back mudroom, the vent for the basement tenant's bathroom vented into the house. Like, so it had problems. Like this was not this was not a normal like house. Okay, so it had some serious issues going for it, and it still generated 3 offers, and it sold for full asking price despite all of those things. So that $1,300 a month paying tenant in the basement made 3 buyers, us included, come to the table to try and snag this thing. And the inexperienced agents out there may not understand that competing offers don't mean over asking all the time. So if you're working with an inexperienced agent, they might convince you to go in over the asking price, because I can show you comparables that justify up to 1.1, 1.2 for a house like that. But an inexperienced agent might take that and run with it and actually have you put that offer on paper, which would result in this case in a gross overpayment. But consistent communication with the listing agent, understanding their expectations and understanding where the market is as a whole, helped my clients in this case not get the property, but considering all the problems that existed, there was a budget my client had. But at the end of the day, with 3 offers, it sold for the asking price for that basement unit. So we're seeing that happen almost across the board with units that are rentable. Looking at more properties and going back to the blog real quick, if we look at the numbers for this week, you're going to see like these are down tremendously from the highs of January and February, where we were seeing average house prices hit $2 million for the first time. So again, this does not mean that a house that was trading at $2 million is trading at 1.283 today. Because when you look at the actual homes that sold, like here's a sample of last week's sales, the numbers I use for my market report, we don't have a ton of sales in that $2 to $3 million range. We do have some homes that are trading lower than they were, like this house on Browning in Plater Estates in one of the better neighborhoods, more insulated neighborhoods, meaning they're usually protected from a lot of market fluctuations. This type of house I think would have traded for up to $2.5 million, but it's sold for 2.124 now. So money is still flowing in this area. I remember these photos were too high resolution. It was taking forever to download. So I'm not going to go through each one of these right now. But the home needed a little bit of work. It's a giant 6-bedroom house in the Jackman School District, which is what people are paying a ton of money for. But this is like one of the few homes I've seen in this price range recently trade. So the fact that, there's a combination of two things. Number one, we have homes simply not being listed in that luxury segment of 2.5 to say $4 million in the East End and in the West End. We saw a lot of that activity in the first quarter of this year, but we're not seeing a ton of that activity now. So the fact that those properties aren't even being listed, they're not available to be sold, is drawing the average price down. But also we do have some downward movement of 10 to 15% on some property types as well, which is evident in the lower price range. When you have a bungalow like this on O'Connor, this thing would have traded for up to $1 million without question in January and February. You can tell that the home needed quite a bit of work. The photos are absolutely atrocious, but hey, it is what it is. Not my listing, not our style, but it is what it is. Like these kinds of land value homes weren't trading under $1 million at the beginning of the year, and now they are. So these homes really are the ones that are dragging the average price down quite a bit. House here on Baltic Ave, I actually like this street. This one's actually more turnkey. Like there's no way this house would have traded. It's not turnkey at all, actually. It needs a bunch of work, but it looks like it's livable as is. This type of home would have traded at $1 million, if not $1.1 million in January and February. And now we are seeing it sitting at $855 and sold at $855 in 8 days on market. But it's a 3-bedroom, 2-bath, semi-detached in the East End with 1 parking spot. Like this is this is the kind of price that people were waiting for back in January and February. Like you can see here, the house needs some work. So you're going to have to pull up your sleeves a little bit and get a kitchen refinished if you wanted. But it's also one of those things that you can, sit on and save some money and do down the road. This house right here that our clients offered on 227 Monroe, it's a complete gut job required situation here. No parking. I think somebody died here. I don't know what's going on, but it's not livable, not usable, needs a full gut job. These people were on the market at $1,050,000. They're on the market at $1,050,000 before. They sold for $940,000. We had an offer in at $910,000. In which they weren't even considering. They turned down an offer for $980,000 because they were really hoping for that $1 million mark. And honestly, you're not going to be able to do that. Like if you're getting firm offers right now, you need to be taking those offers or not listing at all, because this person's indecision at that time cost him $40,000. And there are a number of other properties that have experienced the same thing. So opportunity certainly does exist out there right now. It's just not in the places or ways that a lot of people think. Like you're not getting every single property at a major discount. like, we still have relatively a low to average days on market situation here with 18 for houses. We don't have a ton of firm sales, but we also don't have constantly increasing inventory. Like, this is now the eighth week in a row where we've either not added any new houses to the market or pulled back. And what's really cool to see is in condo land, like just 6 weeks ago, we were at almost 2,000 condos available for sale, or 7 weeks ago. And now we've pulled all the way back to 1,567. And with the rental market the way it is, like we've been talking about the rental market quite a bit, with the rental market the way it is, we are seeing all kinds of investor buyers out there right now looking for special deals in condo land. They're not necessarily finding the deals that they had hoped for, but those investors that are pulling the trigger on some of these condos are able to get either slightly cash flowing or neutral, which really is the goal with single unit rentals. Like, nobody's going to cash flow on a single unit rental. A lot of investors are totally happy with the break even scenario, especially considering the upside on some of these condos after some interest rate. There's going to be some downward pressure on interest rates, which is going to free up some money in the next 18 months or so, perhaps 2 years. Long term, these buyers are going to be laughing. And I better watch my words, because last week I talked about how landlords were taking their checks to the bank. And I had one newsletter subscriber, one of you, so if you're watching, hello, immediately went to call me a capitalist pig because I was excited for our landlord clients who were, taking larger than normal checks to the bank. And she followed up by telling me that she's going to have a house to sell in the next year or so. Well, let's see if this person, if you're listening, I'm talking directly to you right now. Let's see if when you go to sell your house, you're not going to be a capitalist pig like you called me. You're going to leave some money on the table, and you're just going to become a charity and just give some nice young couple your house for a super discount, because we don't want to be capitalist pigs. But thanks for calling me that anyway. And just on that note, I'm super happy to have conversations with people. If you don't agree with me, or if you agree with me, or whatever it is, but if you come at me with that level of ignorance and disrespect, like, I have zero time for that. I'm going to come at you just as hard. I mean, I'm not one of those, like, fight fire with kindness kind of people. There's no reason for you to be rude to me if you don't agree with me. And coming out of the gate and calling me a capitalist pig because I'm trying to help my landlords create a strong retirement for themselves and their families. You do what you want with your own life, but watch your words when you're coming at me, please. So this market report this week is relatively short because I'm trying to enjoy my vacation over here, but I really wanted to make sure that you understand the opportunity that exists in condo land right now and for houses with income producing opportunities. There's really a lot of good stuff going on out there. Something to consider, like, there's a lot of older people that are on locked in pre-approvals. Like, when you go to your mortgage broker or your bank, you go and you get a pre-approval, which locks in that rate for a 90 to, let's say, 120-day period at the highest scale. Usually it's a 90-day period. So we've got a lot of people that have locked in rates prior to the previous increase that are going to expire soon. So it'll be really interesting to see what happens to buyers and the market after the September announcement, and to see if it's going to put even more buyers on the sidelines or what's going to happen there. I'm hoping that we're surprised with the September announcement with not as aggressive an increase in the rate, considering that our inflation numbers did come down from 8.1 to 7.7%, but that's mainly due to decreased gas prices. A lot of other things are still very expensive, so I'm not sure what's going to happen there, but we'll see what September brings. And also another question for you guys, like, what do you consider a deal? Like, if you're a buyer right now, like, what is a deal for you? I would really love to hear that in the comments, because a lot of people, I find that we're coming across a lot of folks that are wanting specific deals, but not necessarily understanding. We're not connecting on what a deal is. Once we go out there, it's still not quite good enough, and we're seeing that regularly. That the discounts that some people are expecting just simply don't exist in our urban markets. Like the burbs and the borderline, like, burgs slash rural communities are feeling the pinch a lot more. And like I've always said, our urban communities are always quite strong and stable during these times, despite some serious moments of volatility, especially when like during COVID, Airbnb regulations also came in during a time of uncertainty, which affected the condo market quite a bit. Now that was a great buying opportunity back in November of 2020 when the shit was really hitting the fan at that time. And now we're kind of in a similar land of opportunity with some properties, not all like we had during that time. So back to the blog. And so what we have here is another interesting scenario. We had a couple of, only two sales in the luxury market. So this area right here that we're talking about, the Rosedale, the Moore Park, Deer Park, Lawrence Park, that whole area, only two firm sales. But both of these sales are just over $2.6 million. Both of them sold within hours of coming to market. So inventory here hasn't really gone anywhere over the past little while. It's been stuck around this like 120 unit mark. But every time a house comes to market here, it tends to do very well. So, 0 days on market in a climate like this, where a lot of people are preaching some serious doom and gloom situations, is a very impressive statistic. Condos in this area are also holding really, really strong, again, with only three sales. So we really can't pay any attention to these numbers right now with only three data points to look at. But what we can continue to look at is, how much inventory do we have, and and how long is it taking for the average property to sell? And all of it is still selling within 30 days across the board fairly regularly. Discuss some inflation numbers here, which we just went over. So we'll see what happens down the road. Like, I'm still of the opinion that mid 2023, we're going to maybe see some downward pressure on the interest rates. Hopefully, as inflation becomes more manageable and the economy strengthens a little bit, the federal government will feel comfortable that they can let some money start flowing again. But from now until the end of the year, it is possible to see a little bit more downward pressure on pricing, which is why it's really important that if you're in a position where you need to sell and you get a strong, firm offer, but it's not quite at that price you were hoping for, but it's relatively close, you need to take that offer and run. Like, listen, like I listed a property that I've been working on for a long time. The sellers and I had a huge falling out. We're just not connecting on any level, really. I had it listed. I brought them two offers, $1.45 million each time. It was two firm offers ready to go. They decided to not take it. They pushed back on it. They fired me. They hired another agent. They listed it and just sold it yesterday for 1.440. So, you could, like I said in last week's email, you can bring in a new agent. You can hire a new agent. You can try all these different strategies, but ultimately the market is the market right now. And as long as you have professional photography, proper floor plans, and a home that looks great, you should be taking whatever offer you have. And changing agents is not going to help you unless you just hate the person you're working with, which probably was the case in this scenario, once in a kind of 10-year scenario for me. But it is what it is. So like, you're not going to be doing better. Like, turning down strong offers right now is not doing yourself any favors. You need to be taking the strong offers as they come, because you're lucky to have a buyer at your doorstep right now, considering what's happening with some other houses. So anyway, like I talked about already, the suburban bordering on rural areas are the ones feeling the pinch most. I don't follow those communities that much, so don't come to me for any stats there. Not too certain. Like I said, we're going to be digging into the Durham area quite a bit, so we will have some stats on those areas, which are doing way better than you might think right now. My clients are currently offering on I'll show you right here. We're making some offers. Oh, no, I'm not going to show you that house. Making some offers on a house in Pickering that currently has three offers on it as well. We're the third offer, so hopefully ours goes through. I think we have a really great chance. But again, it's one of those situations that a lot of people don't understand are happening out there. And like I talked about last week, this neighborhood right here has been like the darling in terms of keeping sellers protected. Only 30 listings, 3 firm sales in a week. Average days on market lower than any other area. Inventory lower than any other area. If you have a house in the Leaside, Davisville, Yonge, and Eglinton area and you want to go to market, you are probably the only people I would suggest go to market, even if you don't 100% need to sell. There is still good opportunity for you to make some money on that sale in those communities. I wouldn't say that about any other community right now. Except for some Leslieville area and some like High Park and North Riverdale stuff. But like, this area right here is just absolutely popping off and has always been popping off. Condos have been very consistent here as well. And you can see that months of inventory is down month over month as well. So right now, should you sell? 100%, 99% no, unless you're in the Leaside, Davisville, Young and Egg area. You should definitely hang on to your property if you can. You should definitely be buying if your finances allow for it right now, knowing that there might be some downward movement over the next couple of months. But long term, I think we're going to be laughing at these prices that are selling today. I think that there's going to be a lot of people building a lot of equity and a lot of wealth for themselves by making purchases today, as long as it fits in with your financial plan and you don't stretch yourself too far. I'm going to put my full face on this to tell you so you understand what I'm saying here. So let me tell you one thing right now. If you are buying an investment property, now is not the time to be maxing out a home equity line of credit, okay? Now is not the time to be 100% financing something through a line of credit. It's not the time to be overextending yourself and going to the absolute limit right now. You need to be leaving some reserves right now because you don't know what's going to happen in the short term, and you don't want to screw yourself and your family over by going all in. And let me tell you, I know a lot about doing that sort of thing. I might have maybe made that mistake and done it again not that long ago. But listen, there's always a light at the end of the tunnel. But now is not the time to be going all in. So make sure you're hearing me on that one. Not taking, if you own a house that's like fully owned outright, sure, draw a little bit because you're going to be able to rent the thing out. You'll be just fine. But you're not 100% maxing out your full draw. And back to the blog. So where are we here? Actually, I don't even think we need to go back to the blog. So again, Birchcliff is always doing well, like it has been, and we have the Kingston Road corridor, which is also pulled back in a big way. Actually, almost 100 listings here pulled back to 77, which is really great. So that is, I think that's all I have for you guys this week. This has been going on for a little bit longer than I had planned. Thank you so much for watching week 129, week 130 coming up next week. Instagram at rmamo at thespringteam.ca. But I want to hear your comments and all that good stuff below so we can start the conversation. Thank you. Have an awesome day.